Welcome to Markets Now. Oliver Slope with Blue Line Futures joining us on a day where we were higher in all the livestock mixed in the grains. And Oliver, let's start off with kind of the champion of the day, which would be the cattle futures, live cattle. The nearby contract posting new contract highs. Back month's getting pretty close. How soon do you think we'll hit those contract highs, and where do we go if we get through those resistance areas?
Yeah, the market's been incredibly strong here over the last couple of weeks, which is really encouraging, especially considering all the weakness we've seen in the outside markets. And a lot of times you get any sort of fear over a recession, you get some pressure in the live cattle market. But we've seen cash firm up, which kind of plays into the seasonally bullish tendencies that we've seen over the past. April live cattle season will start at October 5th, goes through November 11th. We've seen that trend be firm for 13 out of the last 15 years, and we're on a pretty darn good pace at the moment to keep that alive. Now, the managed money position is something that we're keeping a very close eye on as well. The most recent commitment to traders report showed the funds are just long about 30,000 contracts, which is essentially neutral for them. You don't really see them go negative like you do in some other markets like corn or soybeans. So a 30,000 contract position is essentially neutral. If we continue to get some fundamental catalysts to get these funds excited about being long, we could see a breakout above those recent highs. And for December, that's 152.37. Those were the contract highs. Out above there, there's not a lot of resistance. And when we talk about support and resistance levels, we're really talking about previous interactions between buyers and sellers. But up in new highs and uncharted territory, as we call it, you don't have that. So a lot of it becomes momentum and money flow. And if the cash market continues to firm and some of these outside markets fears subside, this thing could have some serious legs to it. But I always try to keep guys in check a little bit too. That you also need to temper your expectations and manage risk if you need to lay something off. This is a pretty decent opportunity to do so, especially ahead of this week's cattle on feed report.
You bet. And of course, we're watching placement numbers there. And obviously, we've been thinking we're going to get into the marketing hole. When do you think that's actually going to come?
Yeah, that's a good question. And I think some of the futures markets, I think, are starting to price that in. As you'd mentioned, I believe we were sitting at highest cash price since 2015, and some of these deferred contracts are in the 160s plus. So I think some of that is priced into these futures markets. So it's going to be interesting to see what this Friday's report shows.
So you mentioned the funds. Let's talk about their relationship in the hog market right now, because the charts look good there. They've exited a lot of their long position. Are they going to keep pushing that market?
Yeah, the hog market, it's a choppy one and a volatile one. We broke down in a big way a couple months ago. We've rebounded nicely. Now we're back to what we've been referring to as the scene of the crime, or where we broke down from September 22nd and 23rd. And when you look at the daily chart, we're a little bit overextended near term. So I wouldn't be surprised to see this market cool off a little bit. And we touched on the seasonal tendencies in the live cattle market, and there's one that just kicked into gear here for lean hogs as well. That starts October 15th and goes through November 6th. For December lean hogs, we've trended lower between those couple of weeks. So I wouldn't be surprised to see the market take a little bit of breather against technical resistance and what is seasonally a little bit softer time of year for the market.
And then over in the grains, of course, a down day in the corn. I think this is the fourth day that we've been down. Are you concerned? Are the technicals breaking down here? Are we going to shoot to new lows for the move here or not?
Corn has certainly softened up, but we're not quite to the breakdown and panic point just yet. We've got the recent lows near 670 and the 50-day moving average just below that, 668. A break and close below there could spur some additional long liquidation and potentially accelerate selling pressure, with not a lot of support until you get down to the 100 and 200-day moving average. That comes in near 655, 656. Obviously, just below that, you've got the psychologically significant 650 level. But I think that we can hold support here. I'm pretty upbeat. We've got some of the outside markets trying to build a little bit of a base, crude oil rallying today, and I hope that corn can be a beneficiary of that. And then the other thing I noted with clients today is yesterday's and today's price action were eerily similar. A lot of the weakness that we saw in the corn market came in the overnight session. From the 8:30 open to the 1:15 close, corn actually was pretty darn steady to a little bit firmer. So I think all in all, that's a little, I might be grasping for straws, but I think that's a silver lining.
Yeah. But we've been seeing harvest pressure and export concerns kind of keeping that market a lid on it anyways, haven't we?
Yeah, harvest pressure has definitely been a big player, I think, in keeping some of these markets in check, corn and soybeans specifically. There were some bullish seasonals that I don't think are going to play out this year for corn and soybeans, but I think a lot of that seasonal tendency in the corn and soybeans market might be a little bit delayed because planting was delayed this year. So you might have some of those seasonals start to kick in a couple of weeks. But once we get past 50% harvest, which we are in soybeans and probably just about there in corn, a lot of that attention is going to shift towards South America and their weather and planting progress, and that's going to be a big wild card going forward. So I don't know that the Bulls or the Bears have a clear advantage at the time being. It's going to be a big wait and see game. And eventually we'll get a bigger move, but I think, again, a lot of that's going to hinge on South America production.
You bet. And of course, we have this tug of war between supply and demand in most of these markets. Soybeans in particular, though, we've had about a 75-cent trading range, $13.50 on the low, $14.25 on the high. We're going to stay in that range for a while yet?
Yeah, we almost broke down in today's session, 1345, 1355. That was the recent lows, which really goes back to significant support back to July 26th. That was the gap. That was tested and filled recently. We tested and held that again. That's our must-hold line in the sand, a break and close below there, and there's not a whole lot of support until you get sub $13. But from a risk-reward standpoint, you're at the low end of the range. The low end of the range isn't where we look to be, selling things. That's where we look to be buying things for value. And I think down here at the lower end of that risk range is where the value is. So I think we can hold 1345, 1355, and hopefully be able to claw our way back to that psychologically significant $14 handle.
And wheat's been testing the bottom end of its trading ranges as well here, but, what is that market trading right now? Anything other than these Black Sea export headlines or not?
The headlines and the volume is really thinned out too. So you're seeing some pretty wacky moves in the wheat market for clients that don't need to hedge wheat or trade wheat. We've been advising them to just kind of sit on your hands and be a spectator at this point because we've seen 40-cent ranges on any given day and it hardly shows up on a chart, and that's a lot of risk to be taking on. So if you don't need to, I'd stay clear for now.
You bet. Don't get chopped up there. Thanks so much, Oliver Slope with Blue Line Futures.